Good evening and welcome to the Australian Stock Market Show. My quote for tonight comes from Arnold Schwarzenegger, who said, I'll be back. No, not. The future is green energy. Sustainability, renewable energy and governments around the world have set bold targets to meet a green energy future. This means loads of investment dollars will continue to be poured into this area. Now, this also means that investors ought to have exposure to the growth ahead. So in the spirit of learning about one of the biggest growth areas of the current decade and beyond, and how to profit from it, tonight Dale and I, in our no BS approach to all things stock market, are going to take a look at renewable energy and how investors should position their portfolios to take advantage of the opportunities in some of the top renewable energy stocks. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. I just couldn't help myself with the Arnold Schwarzenegger thing. I didn't tell you I was going to say that.
No, you didn't.
It just came out. It was one of those inspirations.
That happens with you, doesn't it? You just blurt it out, doesn't it? But you should have said, get me to the boat. Jeez, the rain just pelted down before.
I know. It's crazy, isn't it?
Yeah, I know. Even the ducks were scared.
Yeah, that's right.
And my pool is like literally that far from overflowing.
Oh, my goodness.
Literally that far from overflowing.
And so what does that mean? Will it go into the house?
No, I won't go into the house. It'll just go down the hill over the side and everything else. And everything
you better
else.
Go and do a bomb in the pool just to clear it. Actually, speaking of bombs, someone called me BOM today.
BOM, what's that mean?
It was Colin. He said Bureau of Meteorology, because I rang him to say, you can't go to tennis because it's going to pour with rain and there's lightning.
Oh, I know what I learnt this week what a NIMBY was.
What's that?
I'm not telling you. Cool, you find out yourself. Anyway, but before we do get into our first segment for tonight, again, we're going to take some live calls on the show. So if you want to chat to Janine and I and ask us a question that has been on your mind, then this is your opportunity to pick up your phone and call us now. The number you need to call is 03 9290 9988. That is 03 for Melbourne 909988. To get things started, the first person to call into the show right now will get a free copy of my latest book, Accelerate Your Wealth. So we're excited to be able to chat with you tonight, so make sure you pick up your phone and get dialing now.
While we wait for you to call, it is the fourth Tuesday in the month, and this means that we take a look at the world currencies. So let's get into the charts.
Alrighty, we've got the watch list of the currencies, and it's yearly, I'm guessing, by the figures on my side that I can see without my glasses.
Yeah, okay, so look, at the top of the leaderboard, we've got the Aussie dollar versus the Japanese yen, up 12.4%, doing very nicely there. Australian dollar versus the New Zealand dollar, up 4.3%.
Good.
The Aussie dollar versus the British
wow.
pound sterling's up 4%, which is good news to some people who are waiting for that to rise. And just below that line, we can see the Aussie dollar versus the euro, sort of line ball, isn't it?
Yep.
Aussie dollar versus the Chinese renminbi yuan is down at 0.77%.
Wow.
And I'm going to skip down to the Australian dollar versus the Singapore dollar is down 8.3%. So we're really getting into the negative territory here. Aussie dollar versus the Hong Kong dollar, it's been smashed down at 12.55%. The Australian dollar versus the US dollar down 13.0%. I mean, we've seen the Aussie dollar take a really serious dive.
That's because the US keep putting up interest rates.
Yeah, that's right. So what are we going to do in that situation? That's a tough call, isn't it?
Well, we have to keep putting up our interest rates to try and stem the tide, I suppose, isn't it?
Well, that's what they say, but how far do we need to go? I mean, you know.
Well, the RBA is predicting our inflation rate will be about 7.1 by the end of the year. It's 6 point something now, and they're expecting to put interest rates up through to, I think, around 4%, 3.5%, 4% for their RBA bank rate, and obviously banks put 2.5% on top of that. So that'll make bank interest on housing loans around 7-ish% in that sort of 6.5 to 7.5%.
Yep.
But they haven't stopped yet. So to me, it's not a question if they put the rate up on next Tuesday. It's just they're putting it up. How much? It's more. Is it 0.25%, 0.5%, 3/4? I don't know.
I wonder what that's going to do to retail spending, because especially for Victoria, we know such a significant percentage of the revenue comes from retail spending, and 50% of the yearly revenue comes through at Christmas time.
Yeah, well, you got to look at that, and you know, with interest rates going up, you've got people. I know people personally know people. They said, if interest rates go up a quarter or 0.5% more, I said, I'm in trouble. You know, and these are smart people. And I'm thinking, well,
Well, it must be hard for the banks. We've got to think about the other side as well, for them to just keep pace with everything that's going on. I mean, surely they would do forward calculations on all of that, but it's a fluid environment.
So. It is a fluid environment. So we're going to look at any charts?
All right, I think we should. Yes, let's go and have a look at the Aussie dollar versus the British pound sterling first of all. Now, what do you make of that?
It's dropping away, is it, after all the turmoil there with...
Yeah. I mean, I think it's holding up pretty well, actually, when you look at it. We're talking about somewhere around, you know, where do you actually draw the line, because it's been so volatile, but somewhere around 54, 55, isn't it?
Yeah, but I mean, I would expect I'd expect our currency to be doing a little bit better against this, wouldn't you?
You would, but I actually thought that was going to happen until we saw this rise over the past few months take off, and that changed my view on it. So now this really could go anywhere, couldn't it?
Yeah, it could go anywhere.
So it's a very volatile time. Traders will love this because they'll be able to get short-term volatility and make some money out of it. So it's good from the trading point of view. But what about the Aussie dollar versus the US dollar now? I thought we'd have a bit of a look at this.
That doesn't surprise me.
I've looked at some of the significant falls over time just to see how we fared. Now, if we go back to 1990, we can see that the Aussie dollar versus US fell around 24.5%. We can see it fell around 33% into this low in 1998, and then 29% into the low in April 2001. So you can sort of see that there's a reasonable range of where the currency can fall. We know that during the GFC it fell 39%. We're not expecting that sort of fall right now, but we've seen 32% during COVID, but we're already up to 23 down. So I'd say we could be somewhere between 24 and 28%, could be where it falls. But it may stop here and turn around and go back up, because it looks like there's some support there for it to do that. So we just have to wait and see how this is all measured in the big picture.
Yeah, we will. We will, absolutely. And I mean, obviously, you know, there's a lot of turmoil going on at the moment around the world. There's a lot of things are changing. Things are big. There's a lot of changes, and I think we're going to see a lot of changes over the next decade, and I think I'm going to see a lot of growth over the next decade. I think technology is going to be one of those, but a different type of technology, not what we've seen in the past. So I think there's some exciting things happening, and I think we're doing better. If you do want to call Janine and I and ask us your most burning question, remember the number you need to dial is 0392 909988. Now, is that all we need for Janine?
Well, that is it for our thoughts on the world currencies. Now it's time to get into our first email for the night.
Alrighty, our first email question is from Stephen, who says, "Hi Dale and Janine, thanks for your insights. It's been a great help. I was interested in your thoughts on PMV. I am not in the stock at this stage and are considering entering if it can get 2 weeks above $24.10, being the high on the week of the 7th of October 2022. So let's go and have a look at PMV.
Okay, so he wants to get above $24.20, was it?
That's what he says.
Okay, so we can see that it's actually moved up quite nicely from that low. I think that, you know, there's a potential for it to actually keep going in the short term. But, I mean, obviously just let the stock tell you what's going to happen. It's nice that he's got a level that he's really interested in, you know, waiting for. But I'd say if it falls below this low of the 21st of October, then you'd just let it sit there, wouldn't you?
I'm not sure why he's got his buy price set at that at all. I'm not sure. Have you got any idea why he would have set his buy price at that?
Look, I mean, I think there's a number of reasons if you were going to trade it why you would have already been in it.
Yeah.
But he may have just seen this big bar move up and then see it going sideways and think, well, I just want to see it move up again before I want to get in.
He wants 2 weeks above $24.10.
Yeah.
So 2 weeks, and that's a strange buy rule to me.
It's not a rule, no. But I mean, he may just see that there's a reason. You know, given the fact that it closed here, it looks $24.10 there, right? So I'm just figuring that he's waiting to see it get back above the level of that close.
Well, I wouldn't be entering at that point anyway. But I mean, that's just my thoughts. But do you think it's good, looking good, or not?
Look, investment companies are interesting to look at. If we just look at the whole history of this.
This is Solomon Lew. He's got a history of performing.
That's right, and look, there's huge support around this level for the pullback that we saw in the price now, and I think that there's a bit of upside in it, but I'm just not sure how long that'll go for. That's the only concern that I have for it at the moment.
Okay, cool. Well, that's it on PMV. Yep.
Now, before we get into our next email, if you enjoy watching our show, then hit that like button now. Our next email is from Mary. Hi, Janine and Dale. Love your show. Learned so much for a few days. Very different from other YouTubers. I wouldn't have lost so much money if I found your channel last year. I ordered your first book online. We'll start financial education from there. I bought some BHP a few weeks ago, around $37, and I've been looking to add a bigger position since I'm getting a decent amount of money in a few days from refinancing instead of leaving it in the offset account. The price has been hovering around $38 to $40, and I don't know if I should buy some now and buy more when it falls to DCA, which is dollar cost averaging, or just wait for a better price. I'm more thinking long-term investment. Regards, Mary. So she used the DCA word.
I hate that word.
Is that a swear word in your book?
Yeah,
for
it's
investing?
almost a 4-letter word, isn't it?
Yeah, it's only 3.
Well, I mean, it's just the big end of town talk about dollar cost averaging because that's what they have to do, both go up and down. And I talked a bit about it on my market wrap yesterday about why stocks or why markets and stocks have periods where they just seem to drift slightly lower, drift slightly higher and go sideways.
Yep.
And that's all about dollar cost averaging on the big end of town. But for individuals, it's CRAP. It can get you a return. I'm not saying it doesn't get you a return. It just doesn't get you a great return.
Right.
And if you ask anybody, do you want to beat the market or you just want to be the market? And they always go, I want to beat the market. And you just don't do that with dollar cost averaging.
Yeah, because you're talking about
Mary
buying
will
when
learn
it's
about all of that
falling.
in my book that she's bought.
That's
And she'll
right.
learn why she shouldn't be doing it. So BHP she's talking about.
Yep.
Yep.
I mean,
So,
it's a good stock.
It's a great
to be
stock.
looking
It's one
at.
of your favourite stocks.
It is a lovely share. I mean, right now it's going sideways, and I think we covered this quite well last week. So, I mean, it'd be really good for her to have a look at our show.
Well, she bought it at $37. So, and I didn't get time to mark that on the chart.
Yeah, so she's obviously bought at a good price, but where did she buy exactly?
She said a few weeks ago. So
Yeah,
she
so-
bought it on that down bar probably.
So that's a really, really risky point to be buying any share when it's pulled back the way that BHP has, just looking at it now. It still could fall, and that's the risk.
Well, she said she's getting a decent amount of money from a refinancing, obviously a property, I would assume, and she's looking to put a decent position into it. And I wouldn't be advising that sort of stuff right now because right now it doesn't look like it's strong. And I understand when she probably put the first position and she may not have put much in because that's all the cash she had available.
Yep.
But then if you get a lot more cash, you just don't go and throw more into it just because it's BHP.
No, it's all about direction, isn't it?
It's all about direction. And right now the direction is down at the moment, isn't it?
Down to sideways, yep.
Anything else you want to say for Mary?
No, nothing at all. I just want to see it move up strongly. And I mean, at least it's got to get through this high here, at the very least. But even then, it's still not telling us the direction, this longer term direction is still not clear.
No.
All right, it looks like we have a caller on the line, Dale. Welcome to the Australian Stock Market Show. You have Dale and Janine here. Who have I got on the line, please?
Kenneth.
Hello,
Kenneth
Ken.
Brooks.
Kenneth Brooks, really? Wow, isn't that a famous name, Dale? Kenneth Brooks? Isn't it a singer?
No, there was a Brooks that was a very famous surfer when I was
Right,
young.
a surfer. There
Yeah,
you go.
and Brooks Brothers surfboards
You're not
down.
related, are you, Ken?
Sorry?
You're not related to the famous surfer Dale's talking about?
Oh, that's famous.
Oh, no.
Maybe
I
it should be
don't- I
related
don't
to
think
Brooks
I've
Brothers
got-
in the US. They're nice suits and stuff.
Okay, I think you're talking over Ken.
Okay, I apologise, Ken.
Okay,
That's
Ken,
all right.
what's your question tonight and what's the stock that you've got for us?
My question is, I'm looking at possibly short-term
Yep.
SEEK, SEEK, mainly because it's an employment agent and covers large areas. And we do have a changing world, and I reckon there's jobs out there that will come up that haven't even been invented yet. And they're a type of company that keeps their thumb in the pulse with that sort of thing. So I think it's got potential.
Well, Ken, I love the way you're thinking about this. It's right on that, whole concept of where all the jobs are going, and unemployment's so low, so therefore you've got to be on the money there. But let's just have a look at the chart, shall we, and see what the chart says. Thank you very much for your question. Take care.
Well, the chart's telling me it's going down.
Yep, I think the chart's telling me that it's actually, it may have found a bottom. It's not confirmed yet.
Well, it's not confirmed there, but you've got this, it's still really trading all the way down there. And obviously that low a few weeks ago was lower than this low down through here in June. So this could be just a little bounce up like here before it falls away again, because it does look quite bearish. But I understand Ken's thinking.
Yeah,
But right now in Australia and in the US, we have the lowest unemployment rate we've had in, I think ours is 30, 40 years. And we've got so many people looking for people to, like businesses looking for people to work. So there's a lot of jobs out there, and yet SEEK's been falling away all this time. You know, so what does that tell you?
And that tells me that it's the opposite to what you'd expect, which is
the
weird,
opposite,
isn't it?
correct. You'd be thinking with so many jobs available, because I know, go to the local cafes and they go, oh, sorry, I can't seat you, I don't have enough staff to serve you all day. And you go, well, there's tables. And they go, yeah, that's great, but nobody's going to cook your food.
Yeah.
You know, I mean, I went to a place not long ago and I ordered some lunch, and about 20 minutes later I said, how long's my lunch going to be? Because she did say, oh, it'll be a little while. She goes, oh, it'll be another 45 minutes.
So they're not filling the positions, is the issue.
They're not filling the positions. So you would think with more people advertising jobs that these guys would be raking it in, but
not necessarily.
Not necessarily. So now...
Look, I mean, I agree with you in that in the short term, he's talking about a short-term opportunity, but I mean, I suppose if he's read your book, you know, he may see that the angle of this trend could be important, but that may not be his rules.
Well, they may be his rules. I mean, I understand where he's coming from, and I think it's sound logic, but it's not.
It's not the reason to buy.
It's not the reason to buy, and it's also not reality at the moment either, because SEEK is actually proving the opposite is being true.
And trading short term, you don't want to be trading on the fundamentals. You want to be trading on what the chart's saying.
We never trade on fundamentals. This is the thing: is people say to me, "I want to trade short term," and if the next word is I do it on my research is fundamentals, those two don't go in the same sentence.
No, that's crazy.
They are crazy. Fundamentals are very much medium to long term, not short term, and definitely not day trading. I remember I was at a keynote speaking expo, and a guy came up to me and he said he day trades, and I said, how do you do that? And he goes, on fundamentals. And I went, so you're not doing very well? And he goes, how do you know? And I said, because you can't do that. You know, and his wife smacked him across the head and said, I told you so.
Oh. That's funny.
But it's like, they just don't gel, and that's the point. And so right now, I don't think it's proven to stop falling. Yeah?
Beautiful.
Anything else you want to say?
No, that's it, thanks.
Oh, okay. Well, now we have a question from Cherie, who says, hi, Dale and Janine. Hope you're well. Yes, we're fantastic, Cherie. Thanks for asking. I have a question about Telstra, my favourite stock. I noted it had just changed its ticker code and thus a new chart to go with it. Why would they do this, and what are the ramifications from this change over? Could you please tell me how to now trade this, as the swap appears to have been a 1-to-1 ratio? I have not seen this before. Could you help with some explanation of the above issues? Kindest regards, Cherie. Happy to help you, Cherie, because I think it's really, really good. Before we got that email, I was actually already doing the research on that, because what's actually happening is Telstra is changing its name, but it's going to become Telstra Group. So it's changing its name, and underneath that, what it's going to do is going to have, it's sort of like Facebook turned into Meta. And Google turned into Alphabet. So Alphabet had multiple companies underneath it. So that's what Telstra's doing. So it's going to have, I think, 3...
Which is exciting, and this is what we've been saying about Telstra for so long, that it is the technology company of the future. Yeah, it's great.
It is great news, and all of this happens, I believe, on the 1st of November. So it's trading under TLSDA, which I think it's deferred something.
I think it's finalised on the 3rd.
The 3rd. I know it's next week sometime. And then what will happen, it'll change to its new name, but I'm guessing it's going to go back to the same code.
It's trading on a
again.
deferred settlement basis at the moment.
Correct.
Which a lot of people don't know. They sort of look at their share and think, well, what's going on? If we can show you a chart right now, I'll just quickly switch.
Yeah, just type in TLSDA.
So there's Telstra there. So you can see it says Telstra Corporation delisted. So TLS is delisted. It's part of this process. And it's trading under TLSDA, as Dale said. So we can see there, that's what it's been doing the last couple of days. So it's just taken off, you can see, which is really good. Now, once it starts trading under TGL, which is the next code.
Which is the next code.
It should go, the data should be adjusted so that we can see the historical data of the old Telstra with the new data, because there's nothing, it's just changing one for one.
It's just changing one, so you won't see any difference, Sheree. So you'll be able to, all your analysis that you've done on Telstra, you'll still keep. It'll just be a slightly different code. So all your analysis, you just transpose onto the new code, which is a bit of a pain in the bum, isn't it?
Well, it depends on your software and how that works, doesn't it?
Yeah, it's a bit of a pain in the bum, but hey, it'll all be the same. You are right, one for one, so it'll be exactly the same. So shareholders at the moment won't notice any difference other than the slight change in name and stock ticket code. But if you do need to sell that stock, if you're somebody out there wanting to sell Telstra, there is a way for you to sell your Telstra shares, but it's on their documentation. You need to go into the Telstra Corporate Centre and that and talk to that. But your broker will probably know that anyway if you ring them up, how to do all that. But just trade it normal. As I said, just sit back and wait at the moment. If you weren't going to exit, just sit back and wait. That's fine.
That's it. That's
Okay.
all on
Is that
Telstra.
all right? All on Telstra. All right. Well, Janine, I think it's time we get into our topic for tonight. Now, before we do, now is the time, I think, for everyone to give the show a big thumbs up to show the team that they like and appreciate all the work that goes into producing this show each and every week. So remember, click that big like button now, just below it, just below down there. And it looks like a thumb, actually, a little thumb icon. So click that now. Now, tonight's topic, Janine, is about renewable energy, and I wish I had that sometimes, and opportunities for growth over the short, medium and long term. And of course, we're going to take a look at some great stocks to buy in this space.
That's right, Dale. We'll also want to do our bit to help everyone understand some of the important drivers around global renewable energy investment, and we answer some of the big questions about how to position your portfolio to take advantage of the opportunities and whether this means that you're likely to make more money by purchasing the best stocks in this space and divesting any oil and gas stocks.
Okay, that's a bit ambitious answering all that, isn't it, Janine? I mean, are you sure we've got time for that?
Yes, Dale, and loads more. Now, Dale, you were meant to say tonight that we go green. Then I plan to deliver my green joke.
I only go green after a serious bad curry. But anyway, seriously, it's common knowledge on our show, Janine, that your jokes are really not that funny, I'm sorry to say. But in the spirit of teamwork and being fair to you, I am prepared to give you one more go. But remember, this is the last time, because I think I've said that on about 3 previous shows I've given you one more go. So I don't know how many more of your jokes I can stand. So fire away, see if you can make me laugh, okay? I'm sitting back waiting for it.
Okay, great. I'll make it short and sweet, but I feel like I need a drum roll.
All right.
Thanks for the encouragement. Okay, now listen carefully. What does a tree drink?
Seriously, Jane, isn't that answer obvious? So, all right, don't leave me hanging on the edge of the seat. Just spit it out.
It's root beer. Get it?
No, good on you. All right. What I'm going to do is get everybody watching to think about that and comment below on Janine's joke. So please do that. But also comment. I also want you to comment if we should let her tell more jokes, okay? So please do that just down below. Now, Janine, I really do sometimes wonder who the joke is for, because you end up laughing at your own jokes and I just have this stupid blank look on my face, I tell you.
Okay, Dale, I've got my breath back now and I'm ready to go. The United Nations has set sustainable development goals. Number 7 is affordable and clean energy for all. And the UN has set a number of targets that are influencing government policy. And when you know where governments, big industry and banks are investing, then you can better focus your own investments. Let's take a brief look at the 5 targets. The first is, by 2030, ensure universal access to affordable, reliable and modern energy services.
The second one is, by 2030, increase substantially the share of renewable energy in the global energy mix.
Number 3 is, by 2030, double the global rate of improvement in energy efficiency.
Okay, get the picture? There's about a 4th one about international cooperation around clean energy research and technology.
And number 5 is all about infrastructure and technology for developing countries, and there's a lot of money being pledged there. What's next then, Dale?
I think I'd have another joke. Okay. Of course, the big driver for all this is the climate. And we do need to mention the Paris Agreement, which was forged in 2015 and confirmed in 2016. Now, this is a legally binding international treaty on climate change. So all countries party to the agreement will require to submit long-term low greenhouse gas emission strategies, and in 2024 countries must report on their progress.
The Australian government plans to reduce Australia's emissions to 43% below 2006 levels by 2030 and has formally lodged this target under the Paris Agreement. And according to the government, Australia is on track to reach net zero by 2050. Now, Reputex modelling indicates this policy will generate around $76 billion in investment.
Holy moly. Is this just for Australia? It's mind-boggling to think about that level of global investment. I mean, in May the UN stated that global emissions need to be halved by 2030. Now, Janine, I'm sure you've not stopped there. Do you have something on the level of spending needed globally to meet that target? I'm sitting down.
Yeah, sure do. When you see this number, you'll either jump with excitement or fall off your seat in astonishment. And I'd like to see you do either. The OECD report titled Financing Climate Futures stated that current estimates are that $6.9 trillion is required each year up to 2030 to meet global climate and development objectives. The report goes on to state that the world's energy, transport, buildings and water infrastructure emit more than 60% of the current greenhouse gases and emissions that need to fall by 45% below 2010 levels by 2030 and net zero by 2050.
Holy moly, I've got that much money in my bank account. That's not too much, is it? Jeez, I can't add up that many zeros on it.
Yeah.
But that is interesting, and I feel that you are alluding to the fact that Australia is positioned to be well ahead of these targets.
That's correct. And Australia has a large-scale renewable energy target and a small-scale target. The latter focuses on residential solar power. So these initiatives definitely help.
Now, you might wonder why the government doesn't just build enough solar power plants to power the country. Now, after all, aren't we the lucky country blessed with lots of sunlight?
Well, true, but California is too, and they are well ahead in this race when it comes to investing in solar, having achieved 100% usage of solar to power the state in April 2022. But when the sun went down, gas power plants were required and cannot be shut off completely because they take between 4 to 8 hours to restart. So in Australia, gas power plants are also unlikely to be superseded anytime soon.
Okay, so what are we going to do about that one?
Well, as you know, Dale, developments have been made in large-scale battery technology and massive solar battery farms are being built to store energy locally and across the globe.
Okay. Well, according to energy.gov.au, around 29% of Australia's electricity generation came from renewable sources in 2021, which is positive. Now knowing this, Janine, where should investors be looking to invest?
Well, the best investments are likely to be energy companies involved in clean energy projects in areas such as solar, wind and hydro and green hydrogen, as well as technology and IT companies that support these companies, and ones with technology and know-how to improve the energy grid. According to the Clean Energy Council, there are currently 117 renewable energy projects around Australia. Here is a nice little map showing the large-scale projects. Let's take a look.
Okay, you can see on the map shows the large projects in all Australian states except Tasmania. And there are currently 30 battery projects that are under construction or due to start in Australia with an investment of around $24.2 billion, creating around 14,679 jobs, just around 679 jobs, that's good. And this figure is likely to continue to change. Apparently, when the projects are completed, there are a lot of hurdles to getting them online because of issues with the grid. So work is being done on that areas also.
On the hydrogen front, the Australian government pledged $1.2 billion into this area and wants Australia to lead this technology by 2030, Many ASX-listed companies have invested, including FMG.
I remember that. Now, when it comes to the question of whether you should divest coal or gas stocks to focus on renewables, the answer for me is about the return initially. And I'd never sell a stock without confirming my exit. However, you would also consider your own beliefs and portfolio goals to determine whether to divest yourself of these stocks. And you always do your own research to find out where a company's money is being invested. For example, remember the banks invest or provide funds for different energy projects, so I'd not necessarily dump these stocks in favour of renewables.
Yeah, I agree. And the energy stocks in the coal and gas space include Whitehaven Coal, New Hope, Woodside, Santos. But there is a massive list of companies with exposure to coal and or gas, and you can do your own research on those. Also, it's important to have a balance across different sectors. I'd suggest out of 10 or 12 stocks in a portfolio, an investor might hold maybe, say, from 2 to 4 quality companies in the renewable space, and depending on risk tolerance and experience, one of these might be on the higher risk end.
Thank you.
Well, Dale, it's time we get into the renewable energy stocks. Let's get into the charts.
All right. So what have you got for us?
All
I'm
right.
ready to be awed.
Now, we did cover renewable energies on a previous show.
We did.
And we looked at lots of different renewable energy
We've
stocks.
covered lithium and all those sorts of things as well.
Yeah, and I've aimed to cover some different stocks in this mix here. So I've picked this company's Clearview Technologies Limited, which their special technology is solar glass
Cool.
technology.
I'll put that on my house.
Oh, it sounds awesome, doesn't it? So you can have solar windows, and I just think that's just
but I've
brilliant.
been seeing those in Europe for like a decade or more.
But I wonder if, given the construction, the issues with construction, falling at the moment, there's issues going on there. Is that affecting the share price? I mean, I haven't done the specific research on this stock to find
Well, it's
out
probably
why
an
it's falling.
expensive technology, but I know there's geothermal heating and that sort of stuff for buildings in the UK and places like that.
I know, I just looked at
And
the
in
share
Europe.
price and I thought it would be doing better.
I think that should be doing better, yeah. Because, I mean, you get all your solar energy from your windows.
I mean, does this mean that it's not getting government backing? I mean, look, companies that would get government backing would tend to just do really well because they've got government licenses.
You'd think so.
But anyway, the market cap is 40.5 billion. So I really think watch this space. That's what I'm saying with this one.
I'd agree with that because that's,
Not at the moment, though, obviously, because it's still falling. But when it stops falling, that's when we'd be looking at this one. So the next one I've got on the list is Origin Energy. Now, this company obviously covers all spectrums of energy, but they do have oil and gas, right? So there's an issue there for some people who may be looking for purely renewable stocks.
But that's also a good thing because, it's before we had a car, motor vehicle, we had to keep riding horses till the cars could take over, couldn't they? So you've still got, we can't just throw all the cars out right now and just drive electric cars because there's not enough of them anyway and we can't all power up at the same time. So to me, it's okay. It's going to be, this stock will transition into completely renewables.
I think it's an exciting stock.
I think it's exciting.
I mean, they've got exposure to, so obviously they look after retail, the electricity side of things, generation, wind, geothermal and solar. The market cap is 9.25 billion, so it's a really nice sized company. It's a bit more certainty than some of the smaller ones in that space because there's a lot of rubbish, low liquidity type shares in that space that even though they might have something that's unique or there's a story to tell, the risk for investors is often high in some of these shares. So let's have a look at...
You've got to think something like an Origin. Sorry to cut you off, but you've got to think something
They've
like
got
that.
the funding.
They've got the funding, they've got the capital, they've got the market management, they've got everything, and they're likely to buy some of these smaller companies. They'll buy the technology. Yeah. That's what big companies do. Banks did it all the time, or constantly do it all the time. They keep buying what they need to keep their market dominant. So I'd say some of those big companies in oil and gas now are going to do that over this next decade because they want to be at the forefront of this. But they can't throw away the bathwater with the baby in it at the moment.
That's right.
Did I say that right?
I don't know.
Probably not. Anyway.
Oh, gosh. All right, new energy solar. Another interesting one, investing in solar plants. Now, the market cap is 315 million. So it's a smaller company, as you can see. Look at the liquidity. The volume's just gone through the roof recently. I'm not sure what's going on with this particular company, but obviously you need to do your research before you buy it. But that chart on that monthly chart looks really interesting to me.
Really interesting. Still a little bit of liquid, isn't it?
It is still a little bit liquid, but we talked about maybe having one share that could be on that illiquid side in the portfolio, and this is where you've got to be very careful when making that selection. So it's not about having 4 or 5 of these sort of lower liquidity stocks that are then going to make your portfolio high risk. You don't want to have that. So to get exposure to the hydrogen space, I mean, FMG's actually leading the way now, aren't they?
Oh, well, they're building that big plant in Queensland, isn't it?
Yeah.
Is it Cairns?
It's with Inside Tech Pivot. So I'm going to show the chart of Inside Tech Pivot.
But they're doing something also
well
in Victoria down there where the coal-fired power stations are as well. They're building something down there as well.
Yeah,
a
it's really
hydrogen plant.
impressive, the projects
And they
that they're doing at that.
put hydrogen petrol stations, if that makes sense.
Yeah, it's smart,
a
isn't
better
it?
way of saying it, around the country too, which
fantastic.
is exciting.
So look, I mean, they're spending $9.2 billion in this area, which is not a lean investment by any means. And even though at the moment the chart's down, and we've already said on previous shows, because their focus is iron ore. I mean, that's their core business, but. Obviously, if they're going into different areas down the track and they get more exposure to this type of area, it could take off for FMG in different ways. We don't know yet. It's a big question mark. But in the short term, I'd say I wouldn't be just buying the story. You've got to buy the movement. So if the big money's going into the stock, then it will be going up. Now, right now, that's not the case.
It's not the case, yeah, correct.
Okay, but to have it on the watch list, I think smart. So Inside Tech Pivot, obviously they're into the hydrogen as well, partnering with FMG. A market cap of $7 billion, still good enough for investors to go into, but it depends on what your what your focus is in your portfolio or your self-managed super fund. If you're looking at different stocks for your self-managed super fund, it's more about having bigger, better stocks in a self-managed super fund than having stocks that can be on the higher risk end. And so you need to do an assessment whether you think this is qualifies as a higher risk investment by looking at the liquidity, have a look at the volatility and compare it to bigger stocks and just see how it moves. But right now it's sideways. This sort of movement is very similar to what BHP looks like, although it's in a different point in its overall position. It's well below that all-time high. And there's a significant level of resistance across here. So you can understand why it's stuck and going sideways at the moment, just from a charting point of view. But, longer term, I like it. I just want to see it move up.
Yeah, so you're saying longer term, so you're saying this is going to start to trend really well.
What I'm suggesting is that if it starts to move up strongly, then it could take off, and there's nothing to stop it then.
Okay, because it looks pretty sideways for the last sort of 13 years,
Look,
a long time.
I mean, you've got a good point, because when a stock trades sideways for a long time, it could continue to be stuck in that sideways move. That's what you're alluding to,
because I understand that when you're talking about a cyclical stock, and they tend to be mining stocks who just move up and down between a range over a long period of time, because it's based on the US dollar and the commodity price that they're mining, because they're not growing. They
IPL's in that space as well. All these sort of stocks are in that space, but just different. They're not obviously into the same things as FMG and BHP are into.
Yeah, I'm just saying, what's going to cause this to be in a long-term growth pattern rather than up and down and staying in that band?
Look, I just think that it's about the market turning up again. When we see the overall market move up, I think that this will just go with it, and I think it could do really well because of the volatility of it.
I'm just asking the tough questions that they're going to ask me.
Okay, that's
so
great.
As long as you can answer them, we're fine.
You're asking them well. Look, okay, that's where we're up to at the moment. Have we got time for more?
We've got time for some more. Yes, we do.
Have we?
Yeah,
we've
got time. One more, I think.
One more. All right. Look, I've got Meridian Energy here now. This is a smaller company, but it's still $5.3 billion. It's the largest renewable energy generator. But what was exciting about this one, this is in New Zealand.
New Zealand.
They make 100% from renewables, 100% of their energy from renewables. And I just looked at the chart and I thought, okay, it's down at the moment. I wouldn't be looking at it right now. But if this thing got going, it started to move back up again strongly, then it could be an opportunity. But you've got to have some really good rules on the stock like this.
That's quite impressive, isn't it? I mean, obviously, if it's getting 100% from renewables, that's pretty good.
It is. It's really interesting, isn't it?
So I'm not going to ask you about all what they're doing, but I'm just saying
I guess you sort of go back and you look at some of these and you think, okay, that was $40.5 billion. new solar is only 315 million. You might want to have a market capitalisation as a way of filtering out which stocks you're going to have on your list.
Yes.
You know,
and
to
I
get
think you would
rid of
need
that.
to do that. But I know a lot of people, when they fill their portfolios, they tend to like to put the smaller cap portfolios, more of those instead of the bigger ones, which is the opposite of what we do.
That's the opposite of what you really want to do.
Correct.
Because you've got more risk in your
That's
portfolio.
because they've got that greedy bug. They
Oh,
think
really?
That's because it's a greedy bug, you know. That
Okay.
they think, well, you know, if it's 10 or 20 cents or 50 cents or $1, then it's likely to make them a lot of money. But
Yeah.
it's not the right way to really
No,
construct
because
your
I mean,
portfolio.
this could be a one night show. I mean, it just goes up over a couple of months and then it's over.
Oh, I mean, how many times have you
Performance
seen
is
somebody
over.
construct a portfolio and it's full of stocks that are going nowhere or down? I mean, you see people do. They're
Yeah.
trading on things and they might hit a couple and then they keep buying more of those and then all of their portfolios is poorly
Higgledy-piggledy.
performing.
Yeah.
You know, very, very much. And we see that all the time.
Well, look, I'd just like to talk about beta shares climate
you're
change.
sneaking another one in.
Because we have talked about this one before when we've talked about the
We have.
renewables. Now, we know that with this one, it's an ETF, and the companies that are in this, I think they have to have 50% of their energy that's generated from renewables.
From renewables, yes.
But at the moment, this is still not showing any sign that it's going in the right direction either.
No, it is not.
And I believe it will. It's just being patient, but it's just a matter of having that. We need a strong rise in the stock, in the ETF.
So at the
before
moment,
you
we don't have
risk your
renewed
money.
confidence in renewables.
I don't think I like that joke. That was worse than mine, don't you think?
Probably.
Someone write in the comments that if you write that you think Dale's joke was better than mine, I'll be very disappointed.
I had to come up with some sort of dumb joke, didn't I, on renewables and just something like that. I was trying to think of some really cool joke.
That wasn't
about
even a
renewables.
dad joke. It was just worse than that.
I know, but
That was a Dale joke.
can I renew my relationship with you now?
You better hurry up and give us a good joke. Come on. You got one
No,
on the
I
top of your
haven't
head?
got one, but that's
No.
it. Is that the end of
Okay.
our topic? Is
That is the end of
we
the
finished
topic.
with it, so people know what they need to do?
Yep, hopefully they do.
Okay, fantastic. Well, that is okay for our topic for tonight. Now, before we get into our next email, given you are at this point in the show and you're actually still watching these two crazy people up here, it means that you like what we are doing. So make sure you hit that like button now. That means the big thumbs up one. But I also hope you have your mobile phone ready and have been patiently waiting for the opportunity to call into the show and ask Janine and I your most burning questions. Now's the time to get dialing. The number you need to call is 0392909988. That's 03 for Melbourne, 92909988. So get dialing now and so Janine can keep laughing.
While you call us, we will get into answering the next question, so call now. Our next email is from Jack. Hi guys, can you please look at XRO and give your analysis on whether it's likely to rise over the long term? I do not own it, but I'm looking for an opportunity to buy it over the coming months. Cheers, Jack. Well, great stock choice. We absolutely love this one.
It's a good stock, isn't it?
Yeah,
But
look,
not
I
at the
mean, so
moment.
many people write into us about this. I feel like we're updating every week.
Just about. I mean, I know we get asked. We have these flavour of the month stocks, don't we?
Yeah.
They start to move up, and then everybody's asking about the same stock. And when they
This
start
is not
tanking,
moving up though.
This is not moving up. This is doing the opposite. It's actually been moving down for quite some time. I mean, obviously, we're seeing that big all-time high way back in December 2020. So it took off with the COVID explosion of everybody.
It's more than
moving.
halved in value.
Yeah, it has. So it's fallen really, really heavy because that was what price was that one?
Well, essentially, let's just say that it's fallen back to below pre-COVID levels.
Yeah, 158. So it has fallen back. So right now, I mean, it looks a little bit better this month, but still not enough to get me too excited about it. But I put it on my watch list definitely because when it's been falling for this amount of time, it's generally if you see something falling for a couple of years, it generally will start to find a basing pattern and stop falling, and then it'll start to move up. But
It's
but
just
then
a
we're seeing
great company,
Telstra's-
and it just makes business so much easier for small business to do what they've got to do.
I think it's a great company. I think it's what their products are really good. They've got a lot of exposure, and it's recurring revenue streams. If you subscribe to Xero, you're just going to keep subscribing because changing accountants and changing accounting software is not easy.
No.
So they've pretty much got a locked-in database and sustainability, but I do like it. So anything else you want to say about it?
No,
So,
not right
so
now.
Jack should
Just watch
stay out of
the
it for a
space,
little
I'd
bit
say. Yes,
and just keep it on his watch list. Is that what you're saying?
definitely. Good thought,
Cool.
Jack. Good stock pick.
All right, our next email is from Kevin, who says, "Hi, Dale and Janine. I love your live show and podcast." Thanks, Kevin. I haven't missed one since I found you guys a few months ago. I've been investing for just over 12 months and have been catching falling knives. I'm halfway through the mentor course and can now see every mistake I have made. Education is key. The stock I was hoping you could have a look at is PWR. After a long downward trend, it seems to have churned in June 2022 and has been trending up since then. Fundamentals look pretty good. PE is 7.69, EPS is 0.37, dividend yield is 7.6, and market cap is 500 million. On the negative, volumes are very low, and it's a small cap. The company has been operating for over 60 years, but only listed in April 2021. If I am correct, I missed an entry level at $2.70 and is currently trading at $2.90 at the close on Friday. Would like to know your thoughts on this stock. I am thinking of getting in if it pulls back to $2.70. I am looking at short to medium term. Cheers, Kev. Wow, he's well thought out now, isn't he?
It is well thought out, and this stock is a smaller stock, but it has actually trended beautifully, even though it was trending down. And often this is what we see, that a big percentage of stocks will actually fall significantly in the first 12 months. So, you know, you'd like to think that's over for this share and now it can get on with business.
It could get on with his business. So he's waiting for a bit of a pullback before he might pull in. So it may do that.
He's waiting for a pullback, but his thinking is sort of in reverse to what it should be.
What it should be. And he's just learning. I mean, he's on his trading mentor course. I understand that. But the interesting thing is, and I was only dealing with a diploma student the other day who was saying the same sort of thing. He's sort of saying, well,
I'd like to buy it cheaper.
No. I'm talking about, like, Kevin here has learned a lot from the trading mentor course, which is a beginner's course, you know, and he's learnt what he was doing wrong. And we see that all the time. And I was chatting to one of our new diploma students who are on the first modules, and he's like, "You're detraining me out of everything that I've been doing." And I went, "Yeah." And I said, "And we've also got to deprogram your thinking too." And he goes, he's going, "But I'm hanging on to this because I spent so much money on courses and all the time I spent doing this and all the stuff on YouTube and da. And he said, I've got to, and what you're saying to me is I've got to forget a lot of that stuff. And I said to him, yeah, I said 90% of traders don't make money consistently. So whatever you've learned is probably from those 90%. We're teaching you the 10%. But when I was chatting to him, we were looking at his portfolio and he's got like dozens of stocks and he was just buying these stocks and he's like using these rules that he thought were solid. But it's if you and me could watch something on a YouTube video and we'll go, yeah, that's crap. But somebody else who's not trained and educated could watch and go, oh, that looks awesome, doesn't it? And that's gold. And so people hang on to these things and these old ways of their thinking because they think that's the way they should do that. But they need to let go. And that's what I was saying to this student. I said, just let go, trust the process, and you'll get what you want to get. And this is what Kevin's doing, obviously, now with Trading Mentor. He's learning. He stopped catching falling knives, but I see a lot of people they over-diversify, they buy too many stocks, too many of the wrong stocks, and then they hang on to them.
Well, the one positive is that he's waiting. He's waiting for something.
He is.
But he's just waiting for it to fall, which is sort of counterintuitive to what you want. You want the stock to be rising when you're buying it so that it's likely to keep rising, not falling. So once he gets over that part of it, like you say, then...
Yeah. It's using the rules and trusting the rules. That's the part that Kevin needs to do. And he's still, I mean, obviously the Trading Mentor, as I said, it's really the beginner course. And that's one thing when I'm working with Trading Mentor students, like I was doing some emails today with some students, is trusting the rule and trusting the process and not trying to second guess it.
Well, see, the hardest part for him with this stock is that there's not enough history to be able to get that trust in the stock to know
it's the wrong type of stock for him.
Yeah.
And that's what I often say to Trading Mentor students because they come to us with these
for a beginner, it's not the right choice for a beginner, is what you're saying.
Yeah, and they often come with the wrong stocks in their portfolio. They're buying what they think is good or what chat forums have said and all those sorts of things. And it's a whole process of re-educating their mindset to think like a trader, re-educating
which is interesting because the brokers out there get us to read a whole lot of stuff about what the company's all about, this, that, the other.
I know.
Instead of, let's go and have a look at the chart first and see whether the market actually is agreeing with that.
Correct. And then I know we get comments from people and you go, you guys just look at charts, Eddie. You don't know what the companies are doing. Why aren't you doing that? And I was like, we don't need to. We're traders. That's what we do. So we do look at fundamentals, but we're not going to do it on the show, because there's a lot of stuff we need to do, research to put that together to do this show, and you can't just do that like that. But, to me, I like what Trevor's doing, and there's a lot of long journey that you and me are going to go on, Kevin, I'd tell you that, and just keep sending me emails through to the support system for Trading Mentor, and we'll get you trading really, really well.
Good on you, Kevin.
Yes.
And our next email is from Dave. Hi, Dale and Janine. Just happened to find your show by chance on YouTube. I've recently got into investing in stocks, but know nothing about it. What made me want to was seeing inflation rise globally and the conflict with Russia and Ukraine. Long term, I thought having my money in traditional energy stocks would be a good idea. I invested into Flex LNG and a bit in Paladin. I bought in at $26.74 per share for Flex and 0.68% on, per share on Paladin. After learning from your show about knowing fundamentals and assessing stocks properly, I'm now wondering when I should be looking to sell, if I should, and I'll learn the rest when your book arrives. Cheers from New Zealand, Dave. That's awesome, Dave. Good on you. And we'll just get into that right now. So we've got a chart there of Paladin.
Flex is a US company, so we don't talk about those on the show.
Okay, so what was the price that he got in it? It was
for
just
Paladin, he got in at, I'll just tell you, where are we?
0.6. It's not far from where he is anyway.
Yeah, 0.6 and 0.68 per share on Paladin, so 68 cents on Paladin.
Okay, so look, I mean, the fact that he's got in really low, so the chances are he's bought in probably not on any sort of rules, perhaps. And the stock's fortunately risen up slightly from where he started. Now, I mean, this may turn out to be a really good time to invest in Paladin. It's hard to say. It's obviously a lot better than investing in Paladin up here when it's fallen all the way down into this low in June 2022. So for me, though, it really needs to get back above $1. We always talk on the show about how stocks trading below $1. Once they get above $1, they come on the radar of many more fund managers. So let's just see if this stock gets above $1. I think it's actually might be interesting. But
well, it might be. I mean, it is a good stock, but I think what he's been doing. I mean, he's bought in to a company in an area or companies
that he's interested in.
He's interested, and I don't mind that because if you're interested in that area, that's great because you're likely to do proper research. But then you can't ignore the technical side of it.
Well, like
as well.
you said, on these smaller, low liquidity type companies, you have to do much more research.
Absolutely, you do.
Around the company and what they're doing, where the mines, if they're mining, where the mines are, the way they're processing things. Commodity prices that have an impact on them, currency if it has an impact on them, all of that has to be thought through.
His reasoning for looking at these companies was because of the rising interest rates and the war in Ukraine and things like that. Is that really a solid way or reason to look at this sort of stuff? Because that's what we see people do. They see something in the news or they'll see a YouTube video and all of a sudden they go, oh, I've got to invest in this area. But that's not how we construct portfolios, and it's not how anybody should construct a portfolio. And
that could be like a starting point, though. If, for example, they're interested in it, so you could. Look, there's not one way to do something. So if we say, okay, go and look at the charts first, that doesn't mean that people have to do it that way. I mean, they might want to look at the companies and say, like we've done, we've said renewable energies is the way to go. So let's go and have a look at a few companies and let's just bring up the charts. But they might have looked at all the fundamentals first and then gone and looked at the chart, or they look at the chart first and then look at the fundamentals to decide.
Yeah, I'm talking more about, remember when we used to do portfolio reviews all the time for people?
Yeah.
Back years ago when we did that all the time. Most of the portfolios we saw looked like somebody just threw up on a piece of paper. Like that's how they were constructed. It was just piecemeal stocks, multiple different positions.
Yeah, so they get an idea, this area looks interesting, I'll buy something in that, and the broker talks about the stock and then they add it to their portfolio.
Yeah, and they'll have position sizing all over the place, from small little amounts to big larger amounts and multiple times.
I bet you there'll be people out there sitting, Dale, you sound like you're talking about me.
Well, remember on this portfolio, powerful portfolio, right? That video, which is one I did for the AIA, Australian Investors Association, the portfolio on here had something like 30 stocks on it. I mean, seriously, 30 stocks, that's like 3 times too many.
Yeah, that's a lot.
And you might as well just buy an ETF. If you're going to put 30 stocks in your portfolio or any more than about 15 in your portfolio. You might as well just buy an index ETF and say goodbye.
Yep.
You know, because that's what's going to happen. You know, and you're making your job really, really hard. You know, and people do that, but it's not uncommon for me and you to see portfolios that are people that many. And I know in the 90s when I was seeing so many portfolios, you know, people coming into my office, and I'm just saying, geez, another 35 stocks, another.
Yeah, that's a broker portfolio.
I had somebody that had 60 stocks in their
transactions.
portfolio. I went, well, what are you doing?
Oh, that's nuts.
All you've got
isn't
is
it?
a lot of paperwork and crap,
That's
and you don't
crazy.
need to do. So it is really, really crazy. But to me, you've always got to start with the end in mind. What's the goal, and then we work the portfolio from that. But we find people just they go, oh, this is an interesting area to look at, and they start buying shares in that area, and they fill their portfolio up. But that's not the best way to construct a high-performing portfolio for, for them. They do need to. And I do like this stock, and I think he's done well in looking at this stock at the moment. So I'm not saying he's not doing the right thing, but I think he should broaden his view and look at other areas and balance out that portfolio so he's got some good growth stocks in it, but some good solid
I'm sure he is,
foundations.
but I'm sure this is just like a bit of a starting point for him. But it's not necessarily the best type of stock to start with because of the volatility and the liquidity of it.
All right, I'm going to ask you one question. If I had 10 people give you portfolios to review, how many do you think would be constructed correctly if they weren't a student of ours?
If they're really super conservative investors,
I'm not talking about. I'm just saying the
bought into
portfolio.
the big stocks, there's a potential that I might get one or two.
You might get one or two if it's only the big stocks. But what's the likelihood of that?
Well, look, likelihood's pretty small, and a lot of people will have bought over the years. Some people have bought more and more of a particular stock, so they'll have one stock that's gone up a lot, and they've bought small positions of other stocks, and it's just all over the place.
That's why I'm saying people should get this because it shows you how it affects your portfolio, the returns you're going to get in your portfolio. Because I go through the portfolio, and I've actually go a couple of portfolios, show people
The
how
weightings
people
and-
screwed up their whole portfolio by what they were doing, and really, really affected the returns they were getting. And during a bull market too, this was all bad.
So
'cause
why
this
do
was
people
a while
have
ago.
so many positions at like maybe 1, 2, 3 and 4%?
Because I think more is better, but 20 stocks is no better than 10, and 40 is no better than 10. You're better off having smaller, more concentrated portfolios if you
have
want
good
better
stocks.
returns. You have less work, less risk, less paperwork, and more money. Like, seriously, what's better? Have a lot more work, a lot more paperwork, and a lot more risk, or less?
Yeah.
Less of everything and make more money. Like, to me, that's it. Trade less, make more money. Simple.
Simple.
Simple. But any more you want to talk about on Paladin before I wrap it up? Sorry, I'm on my soapbox, but I get passionate about that.
Paladin, don't ever think that any stock can't go through a big cyclical downturn, because Paladin's
they
a
all
really
do.
good example of that. So, it may be on a long-term rise now. We may be seeing the start of a renewal, but it really depends on the focus of, resources and government and how fixated they are in uranium. And that's the issue, I think.
Well, it does make sense. I'm not. Like, I know people are against having nuclear power stations, and it's in our not our constitution, it's in an act of parliament. We can't have a nuclear power station here in Australia, but sheesh, it's cheap and clean, and it'd just solve our energy problem straight away. It really would. It's just
I'm
an
not gonna
environmental
comment.
issue. I know you're not going to comment, but there's clean ways of doing.
I just think that
nuclear energy.
there's advocacies or activists out there, that there's a financial interest behind everything. So then you've got to look at it and say,
there's financial
okay, there's
activists on green
research
time.
that changes all the time, and there's research that can be done by one party that's actually got a vested interest in it.
Yep.
But at the end of the day, wouldn't it be better to make energy out of something that doesn't dump in your backyard? Like, where are you going to put
I
the
don't have a
waste?
problem with that, but when you get government and corporates together, you always get crap, and that's just what happens. And you get the consumer ends up paying because our electricity bills aren't coming down, and they're not going to come down anytime soon, and that's just going to get worse and worse. And the Labor government are not going to be able to bring it down. So I'll get off my soapbox if you get off yours.
Okay, agreed.
That's it for Paladin. So thank you for sending your questions in.
You've been asking us questions, and each week we ask you for your thoughts. Last week we asked, when the market starts to rise strongly, which stocks are you likely to buy? Now, I just couldn't help myself. Kevin, you struck a chord with me, and Kevin said, another ripper show, dudes. BHP all the way, Janine, and my greatest challenge is when Dale says to be patient and sit on my hands, especially when I'm ready to pull the trigger on a few of these mining stocks. Thanks, WW team. Thanks to you, Kevin. We get it. You can love BHP, but when you look at a chart of BHP's price history, there are clearly times to be patient and sit on your hands and use good rules to tell you when the risk to buy is likely to be lower. Also, if, like me, you enjoy a challenge, I suggest you stop saying that word. A bit of Psychology 101 is really good.
Psychology 101, well done there. Okay, then we had another comment from David who said, great show. Domino's is also on my watch list. Too early yet, great potential in 2023, a good stock for the watch list. And you were so right about timing on this one. Have you seen the fall? Buy and hold is not the strategy here, so great to see you have recognised this too early. Well done. Hope you have some good rules. Thanks so much for your comments.
Thank you so much to everyone who did comment last week. I really enjoyed reading your comments after the show, so keep them coming. This week's question is, if you had enough money to buy one more stock for your portfolio, which stock would you buy? Telstra or Woolworths, and why? You can only choose from those two different stocks from two different industries. I'll be racing back to my desk after the show to see your answers, and we would love to hear from you all. So come on everyone, share your thoughts and get typing. If you're listening to us on a podcast, you can still send us an email with your answer. Before you do, give us a 5-star rating and review on whatever podcasting app you're using.
I know my answer already. I don't know if I'll tell you later. Now, if you enjoyed tonight's show, then make sure you give the team a big thumbs up. That means click the like button just underneath the video to let us know that you've really enjoyed the show.
If you want us to answer your questions, then watch our show next Tuesday between 7 and 8 p.m. Pick up the phone and give us a call. We would love to chat with you. And if you're not able to watch live, you can email your question ahead of the show. You do this by sending your email to info@wealthwithin.com.au and remember to include Wealth Within Live in the subject line.
Well, we really appreciate your support for our show, and you can show your support by subscribing to our channel and hitting that subscribe button now.
All right, well, that is it for tonight's show. We do hope you enjoyed what we presented tonight. We've so enjoyed receiving all your emails and thank those who called into the show. We love the opportunity to chat with you personally.
As always, thank you for joining us, and we hope you have a great week. But for now, goodbye, good luck and good trading.
Bye for now.